Hello, hello, everybody. I hope that I am live this morning for you. Welcome if you are watching this on replay. We are streaming today on YouTube, my Facebook, and in our private Facebook community for entrepreneurs and small business owners called Small Business Finance Simplified, because we are all in this together, you guys. As small business owners, we all need some help. As a 25-year CPA who has helped businesses with all sorts of different projects in various industries, I understand finance and accounting, and I am here to give you tips and strategies and trainings. So as you're coming on, if you will grant StreamYard permission to see your name, then I will be able to see who it is that's coming on. And I see Amanda. Hi, honey. Thank you for coming. So today's topic, and first of all, let me just say that I'm coming to you from Texas, where we are having a ton of snow. It's been a crazy snowstorm. We were without power for a couple of days here. So I am streaming from a hot spot today. So I am hoping that you guys can see me. So give me a thumbs up if you can hear, or just say you can hear in the comments would be super helpful for me to know that you that this is actually working, because I was a little bit nervous about that. But anyway, I see some numbers coming on. Oh, and you guys are giving me thumbs up. So good. I'm glad you can hear. You guys, so today's topic is a really, really important one. We are going to be talking, hey, Janelle, we're going to be talking about employee retention tax credit. I mean, I know, like that just even sounds boring, doesn't it? It does sound boring. So I assure you that this is coffee with Christie, not cocktails with Christie. Although I will tell you, I probably felt like cocktails with Christie. Oh, it's snowing in Delaware too. I felt like cocktails to review all of this stuff. But you know what, you guys, even though it's complicated, these rules are a little bit complicated. I'm being really honest, but it's worth it. It is worth it, because this is a huge potential tax credit for you. So let me just stop right here and say, this is for those of you that have W-2 employees. So for those of you that have W-2 employees, you are in the right place. You definitely need to listen. I'm going to make this as simple as possible. I am all about simple, everyday words, everyday analogies. Ask your questions, but it is worth it. For those of you that don't have W-2 employees, this will not pertain to you. So this may not be the training for you. I know I have a lot of viewers who watch from other countries. This is also not applicable for you, but you may be watching and let somebody else know. Tell your business bestie about this training, because this is something that got overlooked by a lot of people. And frankly, a lot of us in the finance and accounting world wanted to overlook it, because it's just kind of complicated rules. They didn't write this one as clearly as they could have. So, but we can do hard things, you guys. Like, no big deal. Like, no big deal if they wrote the rules a little bit complicated. When money is on the table that can benefit our businesses and can benefit our employees, it is worth it to figure it out. So that's what I'm going to do today, and I'm going to explain it. So, hey, oh, Connie, I love that. Hi from Delaware. It's snowing there too. Okay, well, the snow stopped here. We were without power for 2 days because we're in Texas and we do not know how to deal with snow. Like, it's crazy. We don't even have snow plows. So you don't have employees, but some of my clients do. I love that. So listen, because this is really, really applicable for all of our clients. Connie, I can't remember, are you in the accounting world too? Like, it's something that, you know, a lot of us sort of avoided. But okay, so let me first start with what is ERTC? Okay, so you will hear this called ERC and ERTC. The IRS is now calling it ERC. So you'll hear it both. It's Employee Retention Tax Credit or Employee Retention Credit. So, you know, that may sound confusing to you, but what it is just one more way that the government is trying to give us a benefit for maintaining employees during this crazy cycle of, you know, COVID and the pandemic, and just trying to retain people. So you may be saying, why am I just now hearing about this? And I thought this didn't apply. And so you are on top of it if that's what you thought. because a lot of people did not think that they were eligible or they didn't want to. So first of all, like I started with, it pertains to companies that have W-2 employees. So that's the first thing, because it's employee retention. But here's the thing. When this first came out, this came out back when the CARES Act came out in March of 2020. And it was part of it. And it basically said that you could get PPP or ERTC. So for most people, you opted for a PPP because that was just, money given. It was more money. It was, it was what we needed. So quite honestly, most of us ignored ERTC. And so when the new PPP came out in December of this year, that was where all of our focus was. Well, guess what? They revised and updated ERTC, and there are lots of changes. So who is eligible? You have to have employees in order to be eligible. But beyond that, they have changed. You can get this even if you've had a PPP. You can get this even if you have up to 500 employees. That's a change. It used to be only up to 100. Now, I will say your benefits are greater if you have less than 100 employees, but you still can benefit. And any money that the government is giving to help us maintain our businesses, which helps, remember you guys, like, I'm so proud of you as business owners, because not only are you following your dream and your passion to run your business, but you are affecting our economy. Everything, follows from each other. So every business affects another business, affects another business, affects families, right? And we all came from a family and have a family. So you are truly impacting. So it's worth it to figure this out, even if it's small. However, it's not really that small for a lot of you. How much can my business benefit? This is why you guys need to listen up. This credit is worth up to $19,000 per employee. Yes, per employee. That is why it was worth it for me to read through all of this and to try to simplify this down for you, because this is worth it. $19,000 per employee. Even if you don't qualify for all $19,000, it is worth it to figure out how much you qualify. So now your question is, does my business qualify? So this rule, when it changed at the end of December, what they did was two things. They went back and amended the original rule. So this amended back to March of 2020. And also they implemented a new rule going forward for 2021. The rules are similar, but different. Gotta love it. Similar, but different. So we're just going to walk through both of the sets of rules, because you can qualify for 2020 or 2021 or both. And the qualifications are by quarter. And it is complicated enough that I thought a decision tree was in order. You guys know I'm a visual person. And so I'm forever scribbling out for my clients decision trees. So let me see your likes and hearts if you are decision tree visual people. I know when I did the 1099 one, you guys all loved that. Or let me know in the comments if you love a decision tree, because I am a decision tree kind of person. So I'm going to share my screen with you now and walk you through this. Okay. So this is 2020. Do I qualify? And literally, we're just going to do yes, no questions, because it's just easier. So do you qualify? The first question is, were gross receipts for at least one quarter in 2020 less than 50% of gross receipts for the same quarter in 2019? Okay, so were you down at least 50%? Gross receipts is just the revenue that came in the door for your business. Any money that you got for PPP or EIDL do not count in that number. So this is just, the revenue that you brought in to your business. So gross receipts needed to be down at least 50% in any one quarter of 2020 relative to 2019. Okay, so let's just go the no route first. A lot of you are going to have the yes route. And quite honestly, the yes route is the better route. There's more money available, and it's just an easier process. But let's go the no route first, because some of you were fortunate and didn't have a decline of more than 50% a quarter. So the next question is, was your business fully or partially suspended by the government during this period? So this wasn't like I wanted to shut down because I didn't think it was safe. I understand that. And kudos to you for those of you that did, but this is, did the government actually shut you down? So you guys know here in Dallas, at least, our nail salons were shut down. I'm going to get your nails done, girl, and I need to get those done. Our nail salons were shut down. So for those nail salon owners, your answer here would be yes, the government really did shut you down, partially shut you down. So if the answer to that is no, that the government did not shut you down, well, then this doesn't apply. So you're done with this. But if the government did shut you down, so that this doesn't apply if you didn't have a greater than 50% reduction and the government didn't shut you down for 2020. Stick with me though, because the rules change for 2021. So for 2020, if you didn't have greater than 50% reduction in revenue over one quarter, or the government didn't shut you down, you're out. If you didn't have 50% reduction in revenue, but the government did shut you down, now the question is, were your average 2019 full-time employees greater than 100? This does not count part-time employees. It only counts full-time employees. And full-time employees, by definition in this particular instance, is that they work greater than 30 hours a week or 130 hours a month. So do you have more than 100 employees, full-time employees in 2019? So if the answer is yes, that you had more than 100 full-time employees, you still will have qualifying wages for this ERTC if you paid them. This is the big thing. When they were not working. Okay, so if you were shut down and they were able to work from home and you paid them, then that does not qualify. If you were shut down by the government, so they were furloughed, but you paid them to not work, this is the critical part, not work, then those wages are eligible. Okay. However, if you had less than 100 employees during the time you were shut down, wages you paid to employees, whether working or not, are eligible for ERTC. So that difference is greater than 100. It's only wages you paid when they were not working. If it was less than 100 and you were shut down by the government, then it's wages you paid regardless of whether they were working. Okay, so that's a huge change on what qualifies, depending on how many full-time employees you had. So you need to look at that. So now let's just go back up and assume that you guys had greater than 50% reduction in gross receipts in a quarter in 2020 relative to 2019. And that will apply to a lot of you, okay? So qualified wages that you paid in that quarter are eligible, and crazy enough, future quarter wages. So let's just say that you qualify in the second quarter, and because you are down, say, 65% in the second quarter, then future wages still apply in the third quarter until the end of a calendar quarter in which gross receipts are back to 80% or greater of gross receipts for the same quarter in 2019. Okay, so I know this sounds confusing, but just stick with me. Okay, so if you were down 65% in the second quarter, and then the third quarter comes along and you are down, you're doing better. So you're only down 50% now. You still qualify because it's until you hit 80% of gross receipts. So now you qualify for the third quarter. Well, let's just say that in the fourth quarter, now you are only down 10%. Okay, so that's the 80%. That's the end of the road, because you get it for the fourth quarter because the quarter that you qualify for is until the end of the quarter that you hit the 80%. So if that third quarter had been, so we said you were down 65% in the second quarter, what if in the third quarter you were only down 10%? Well, now you still qualify for the third quarter, right? Because it's until the end of a calendar quarter in which gross receipts are back to 80% or greater than the same quarter in 2019. So now you're down 10% in that third quarter. You still qualify for the third quarter, but that's the end. Okay, I know that's a little confusing, but you guys, this matters because it's actually like a lot of money, because they are basically, you qualify in one quarter, you want to qualify as early as you can. And then, you will basically, once you qualify for one quarter, essentially qualify for 2 quarters immediately. Does that make sense? Okay, so I know that's a little bit confusing because the rules are written that way, but I have a little calculation sheet that I'm going to show you also to help make this more simple, because you guys know I'm all about simple. Okay, so now you're saying, okay, I know that I qualify and I understand where the qualifying wages are going to come from, the 50% rule. But now the question is back to the same question. Did I have more or less than 100 employees? So were average 2019 full-time employees greater than 100? Okay, so if the answer is yes, again, were the employees furloughed with pay? So did you pay them to not work? So if you paid them to not work, then those wages are eligible for ERTC. They're eligible for the credit. If you did not pay them, they are not eligible for, if you did not pay them to not work. So if you paid them and they worked from home and you have greater than 100 employees, you're not eligible. But, so this is really, really benefiting for small businesses. But if you paid them, if you're less than 100, it's back once again to regardless of whether or not they were working, those wages are eligible. Now, one big caveat that I need to point out is that the wages you paid, you cannot include wages paid with PPP funds. So I know that gets a little more complicated, because that means that for every person that worked for you, you have to know how much you paid them, how much their qualifying wages were, which is basically their compensation plus qualified healthcare costs that you paid. And then you have to deduct the PPP money that you used for each employee. So it's a little bit, I get it. I mean, I know that it's complicated. This is why I'm bringing this to you guys, because this is real money. It's going to be a little bit complicated. I strongly encourage you to work with a professional on this. I strongly encourage you to work with a professional, because it's a little bit complicated, but it's worth it. You guys can see there's a lot of money on the table. So for 2020, the maximum amount that you can get is $5,000 per employee for the year, $5,000. Now this changes in 2021. So let me show you how the calculation, the decision tree is going to change a little bit, as well as the amount that you can get. For 2020, you take that qualifying wage number and you can qualify for wages up to $10,000 per employee. And then you can take 50% of the qualifying wages. So that's 10,000 times 50%. That's the 5,000. For the entire year of 2020, you can get 5,000 per employee, which is still great. That's still great. And there's a lot of you that will qualify for that, especially because of the way that you will have applied your PPP money and per employee and over the time. Remember, because you're going to reduce that. But as soon as you've used up your PPP money, then you don't have to take that out anymore. So it's not actually that hard. $10,000 per employee would be, $40,000 annual salary, essentially. So it's not unreasonable to think that you might have some of those. So let me talk to you now about 2021. Are you guys tracking? Does this make sense? Do you have questions? I know it's a lot. I know. Like I said, I've been going bleary-eyed working on this, but I wanted you guys to see it. So that's why we're doing this. because I know it matters. Okay, 2021. Do I qualify? Okay, so it's similar, but not exactly the same. So 2021, and yes, I realize that we are just in February of 2021. So it's weird to think about this for 2021 going forward, but this is so cool because this is something that you can plan for right now and be strategic about. And you guys know strategy is my favorite thing. Let's be strategic in running our businesses and how we apply things. So the questions for 2021 were gross receipts for Q1 or Q2 2021 less than 80% of gross receipts for the same calendar quarter in 2019. That is not a typo. It is 2019. So we are going to compare 2021, this quarter of 2021, to the first quarter of 2019. And the reason this is beneficial is you'll really see it when we get to the second quarter of 2021. If we were having to compare that to 2020, well, 2020 was completely garbage for a lot of people. So you may be doing better in 2021 relative to 2020, but not better compared to 2019. So they're really allowing us to compare back to when business was more typical, back to that time frame. I hope that that makes sense and you see the benefit of that. The other change that you may have noticed is it changed from needing to have a 50% decline to only needing to have a 20% decline, because they're asking, were the gross receipts for 2021 less than 80% of the gross receipts for the same calendar quarter in 2019. So if in 2019 you made $10,000, then if in 2021 you made $7,000, you have a 30% decline. Okay, so whereas if that had been 2020 versus 2019, you had to show a 50% decline. 2021 versus 2019, you only have to show a 20% decline. Okay, so that's a really good change. Okay, the other caveat that they threw in there, just to make things a little bit more confusing, but it's all good. Like I said, these are little tweaks and complications, but they're beneficial. So that's why it's worth it. So the other thing is, if you don't qualify in a particular quarter, you can look at the immediately preceding calendar quarter and compare that to 2019. So what that means is in Q1 2021, let's just say that Q1 2021 is not down 20% relative to Q1 2019. So if you hit that and you go, nope, I'm not, you can then look at the immediately preceding quarter, which would be Q4 2020, and compare that to the equivalent quarter in 2019. So you would compare Q4 2020 to Q4 2019. And if you're down just 20% now, instead of 50%, remember, like a minute ago, we were talking about 50% declines. For 2021 eligibility, all you have to be down is 20%. So if you qualify there, if you're Q4 2020 is down 20% relative to Q4 2019, now Q1 2021 qualify. Okay, I know that's a little confusing, but I promise, like, it's just step by step, you guys. Like, I have built my business for over 20 years on taking, these big concepts, and we're just going to simplify them down step by step, chunk by chunk. I promise you, this is doable. So don't get overwhelmed. Follow the decision tree, and you will see. And it's just general, and work with your advisor. In order to do this, you're going to need to work with your payroll processor and a professional advisor. I assure you, this is not, but it is worth it for you. The first step, before you get any of those people involved, walk through this decision tree, because it is worth a little bit. It's worth a half hour of your time to figure out if this applies, right? It's worth that, because you're eligible for up to $19,000. And I'm going to explain where the 19 comes from in a minute. We talked about 5 already comes from 2020. So obviously the other 14 comes from 2021. which is huge. $14,000 is available for this year. So let me explain to you. So here's the question. Let's just follow it, the decision tree down. So first of all, let's just say that you didn't have that 20% decline, just like we talked about, with 2020. So if you didn't have the 20% decline, the question comes back again. Was your business fully or partially suspended by the government during any calendar quarter of 2020? That needs to say 2021. Sorry about that, guys. I'll change that. So my hope is that the answer is going to be no for most of us. I think most things are not shut down right now during 2021. But it's possible some are. So if the answer is yes, that you were shut down, then we're going to trace through the average number of employees. If the answer is no, that you weren't shut down by the government and you didn't have that 20% reduction, then ERTC does not apply to you. So that's what this says right here. ERTC does not apply. If you were partially shut down by the government, now the question is, did you have full-time employees of greater than 500? So you guys, this changed. When we looked at 2020, we were looking at 100 employees. Here we're looking at 500 employees. So they've changed this and broadened this. So this applies to so many more of you. So many more of you can get even a partial payment. And that matters, right? Every dollar helps us run our businesses, which affects other businesses and families. And I'm cheering you guys on, like, let's do this. This is money that you can take from the government. So, they're trying to help us out. Let's do it. So were your average employees greater than 500? If your average employees were greater than 500, then we're going to be back to that same thing where they will give you qualifying wages, but only if you paid people who were not working. Okay. So if you sent people home because the government said you had to send them home, but you continue to pay them to not work, then those are qualifying wages for this employee retention tax credit. If you paid them and they worked, then it doesn't apply. Okay, so now let's just say that you have less than 500 employees in during 2019. And it is weird. You go back and look at 2019 for your full-time employees. And remember, full-time employees is greater than 30 hours or 130 hours a month. So during the time that you were shut down, qualified wages paid to all employees, whether working or not, are eligible for ERTC. Okay, so that's a great thing. So whereas for 2020, you didn't qualify if you had 150 employees, if they were working, you only qualified if they were not working, right? Now it's 500 for 2021. So this put a lot more of you into the possibility for the calculation, okay? So that's all we're trying to figure out here is, am I eligible? And then the next step is how much, right? Okay, so that answers that question. So let's just say that you did have a 20% reduction in Q1 2021 relative to Q1 2019. And we are still in the middle of Q1 2021. I realize that. And this is the information that we have up to date right now. Today is February 18th. So this is my best information as of this date. Some things may change. So keep on top of things. Use professionals that keep on top of things. So you have the ability to be strategic in your business right now. And let me talk about that as we walk through this. So the qualified wages in this quarter that are eligible, Q2 wages are also going to be eligible if Q1 wages are eligible. So wages, once again, paid with PPP funds do not count as qualified wages, okay? So the question now is, did you have employees in 2019 greater than 500? So again, this used to say 100 in 2020, but now it says 500. So if the answer is yes, were they furloughed with pay? Were they not working, but they were at home? So if you had them not working, if you had them working from home or you weren't paying them, then you're out of luck for this ERTC because this is, for employee tax retention. If you had them paid and not working, then this qualifies, okay, for greater than 500 employees. So this really can benefit you. However, if you had, then that's an eligible quarter for qualified. So if you had greater than 500 employees and if you had less than 500 employees, I'm sorry, if you had less than 500 employees, then it doesn't matter if they were working or not working, all those wages count, okay, that you paid, except for that we can't include PPP because they gave you that money already for free, remember. Okay, so I am hoping that this makes sense to you guys. I'm hoping that you're starting to have a sense of whether or not you qualified for, sorry. I'm hoping that you're starting to have a sense of whether or not you qualified for the tax retention credit. So now you're like, okay, I think I get it. How do I calculate the credit, right? So you're like, oh yes, I definitely had a 50% reduction in 2020. I had a 20% reduction in 2021. You can kind of tell, you already know your 2019 number, so you can kind of tell how things are going. But now you're like, okay, but how much money? How much money is this even? What are we talking about? So let me show you that. Have another little document to show you. Okay, so you guys, we're going to start with this. So this is eligibility by quarter using gross receipts. This is just a little calculation thing. So on this, you would enter your information in boxes this color. So you are going to go through and put in your gross receipts for 2019, right, and 2020, and this actually just calculates for you and tells you what that percentage decline is. So you can see here in my example, there was a 25% increase in this example. So obviously that one didn't qualify because, first quarter 2020, let's just assume it was great. So then second quarter comes along and we went from 120 in 2019 down to 45. So we had a 63% decrease. Okay, so do we qualify? Yes. The answer is automatically yes. And remember that because we qualified here in Q2, we're automatically going to qualify until the end of the quarter that we are back at least 80% of the prior year. So you're going to immediately qualify for Q3. So the question is, so this one immediately went to Q3, but because in Q3, I put an example where we were only down 15% in Q3, that ended it, right? That ended it. I don't qualify anymore because now I'm back at 80% of the prior one. Like, let's just say, let me just change this and say I put it in at, 90,000. So now I've lost 31%. Did you guys see? So I've lost 31% now. So I automatically qualified for the 31. I've got 31% down. So I'm not back at that 80%. I'm still not at the 50%. Remember, I only had to qualify for the 50% the one time, and then it continues until I get back to 80% of the prior one. So that's how I qualified for the fourth quarter automatically. So then the fourth quarter, it cuts off and the rules change. Okay. So then you come back and you do the same thing. You put in 2019, which is just going to feed automatically from what you've already put in. And you're going to enter your 2021 numbers, which, is a guess at this point for you, but you'll have an estimate of 2021 for right now. This is a go forward thing, right, for 2021. So this matters because we're going to actually be strategic, you guys. We're going to be strategic in our business and our decision making, which is what I love because, when you're just shot in the dark and hoping that you make money, I mean, it's just like getting in your car and driving and hoping you end up where you wanted to go, right? If we don't have a plan, if we're not strategic, we will not end up where we want to go. We've all been lost before and seen that in our car. That's why we use GPS. So anyway, so sorry, I'm trying to get back to see if you guys have comments or questions because I didn't have that pulled up. Sorry. Okay. No comments or questions. No new ones yet. I hope this is not overwhelming, you guys. I hope that you're feeling motivated by this because there's a lot of money on the table. So then in the first quarter of 2021, so let's just say that, you know, we're comparing, remember, 2019 versus 2021. So now we're down, we've made $90,000. So that's only a 10% decline, and you have to have a 20% decline. So you guys may be saying, like, how is it that the answer is yes? Well, the answer is yes, because remember the rule that you can go to the preceding quarter, and in this preceding quarter, fourth quarter versus fourth quarter, it was down 23%, which made it more than 20%, which made the first quarter qualify. So let's just say that I change this and I say 110,000. So now I'm 15% down only here. So I'm 10% down here and 15% down here. So now Q1 is not a qualifying quarter. Does that make sense? I know it's a little bit confusing, but that's why this thing, you know, calculates. So, and like I said, you can just walk through the pieces one by one to understand that. Okay, so now this tells you that you qualified, and now you've figured out which quarters you qualify for. So the next thing is you actually have to calculate this by employee. So you literally go through and you say, oh, I didn't qualify for the first quarter, so I'm going to skip that. I did qualify for the second and the third quarter. So you literally put in, you know, each person and their name, and, or, you know, not their name, however you want to do it, whatever, but you list person by person. Yes, I know this is tedious, but it's worth it. And you're going to use your 941s. You're going to use what your payroll provider is giving you. So this is not going to be as bad as you're thinking, but you're going to go through, and this number is qualified wages. So qualified wages, once again, is compensation that you paid to them plus healthcare costs that you paid that are eligible, minus the amount that you paid with PPP funds. Okay, so once you put that number in, remember that the total qualified compensation, and I forgot to mention this on the decision tree. So on 2020, we talked about that the total qualified compensation available was $10,000 for 2020 for the year. For 2021, total qualified compensation is $10,000 per quarter. Per quarter, you guys. That is like double the money. And even better than that, whereas in 2020, you take that $10,000 in possible qualifying wages and the tax credit is 50%. In 2021, it's 70% per quarter. So that's how we got to the 19,000. 10,000 in qualified wages times 50% for 2020 is 5,000. 10,000 times 70% is 7,000, and you are eligible for that for each quarter of 2021. So this is a huge benefit. And remember, not only did the benefit substantially increase, but also the qualifications to receive it decreased. So it's really like, it's really golden. That's why I really wanted to teach you guys this. It's so good. You need, share this with your business besties. You guys, we all need to take advantage of this. And if you qualify, take this money. So you're going to input all this. So in this example, this person got $10,000 per quarter in qualified compensation after we backed out the PPP money. And so their total qualifying wages is only 10,000 because it maxes out at 10,000. It doesn't matter if you paid them, you know, $1 million, 10,000 is as much as you can take. So then it's 50% qualifying wages. So that's $5,000. Now let's just say that in 2021, they've gotten a raise. So now they're getting $15,000 per quarter. Well, it doesn't matter. The max is 10,000 per quarter. So they still max out at 20,000 though. Remember, for all of 2020, it was 10,000. For 2021, it's 10,000 per quarter. So they got 10 here and 10 here for 20,000, but they get 70%. So that takes them to the 14. So this person, you would get the full 19,000 for. This other person, we have in at $2,500 in qualifying wages after PPP funds are taken out. That leaves them with $7,500 at 50%, so $3,750. Their salary remains the same for 2021. They get $2,500 in qualifying wages, so they have $5,000. But now we're taking 70% of that. So you see, for 2021, your tax credit is $3,500, and you only had 2 quarters, whereas for 2020, we put in 3 quarters and got $3,750. So it's a huge advantage. So you would do this and put in each employee, and remember, you're only going to input this for the quarters that you previously determined were quarters that you qualified for. Okay, so that makes sense. So then the last thing is the beautiful, like, woohoo, it all works out. So you can see, like, this just all this is like your 100 employees or whatever. And you obviously are going to have to, work with your payroll provider to get all this information. That's the easiest thing. You've got it on your payroll reports. So you're going to come down here and here's your totals. And this feeds back up. And so it tells you your total qualifying wages for 2020 times 50%, your total qualifying wages for 21 times 70%. So in this instance, we just put in 2 employees, you guys, and got $26,250. So this is worth it. This is worth it. Work with a professional, work with your payroll provider. This is absolutely worth it. It's money on the table. So let me go back to these banners. Okay, so we talked now about how you qualify. If you qualify for 2020 and 2021, we talked about the decision tree. Then we talked about putting in the eligible quarters, determining the eligible quarters by just putting the numbers in, and then actually calculating it by employee. So now what I want to say, I've said it already probably 100 times in here, is be strategic in your decision making. So what I mean by that is, for those of you that have taken PPP money, that's a big thing, right? Because the PPP money comes out, and a lot of you may have already applied for forgiveness for 2020. So it is what it is. Whatever time frame you applied for it, that's what it is. But for 2021, you can be strategic about it and think about it. So you may want to shorten your time frame, or if you, for instance, like we told you when you were doing forgiveness, the advice that we gave most people was just go ahead and do it all payroll. It's easy. You don't have to show any of those operating costs. Even though they gave us a bunch more operating costs, it's just easier to just do payroll. Well, you can now see that that's not necessarily going to be the way we want to move forward with this, because if you can use just 60% of your PPP money as payroll and the other 40% from those operating costs, then that's a huge thing, because it reduces that number for the qualifying wages. Because remember, you have to back out the money you used from PPP for wages in our example. So if you are able to use amounts of the PPP loan for those other costs, this is the time to be strategic and to figure it out. And yes, I know it's a pain, because you're going to have to pull your lease and you're going to have to provide all this documentation. But remember, if your loan was under $50,000, you have you have very, very little to provide. And even under $150,000, it's not that much that you have to provide, but it's worth it because it gives you more money that you qualify for this employee retention tax credit. So that, I'm just telling you to be strategic in thinking through your decision making. Some of you don't have any great operating expenses, but it really depends on how highly compensated your employees are. I have a client with more highly compensated employees, so it's probably better for them to stretch that period out to longer, right? So that they can show less and get the maximum amount per quarter. For others of you, it's smarter to do it in 8 weeks. Be strategic. There is no reason not to be strategic about this. So last question, and we're wrapping up. How do I get the money? So for 2020, you go back and file an amended 941 to show it. This is money that you're taking against what you paid as payroll taxes, right? So you're going to go back and file an amended 941 and get that money back. So if you don't have, and then you're going to work with your payroll processor for 2021 because you want to just not pay in this money right now, right? Like you want to tell your payroll processor, don't pay that money in because I qualify for this much off. You can also file a Form 7200, which is special for this, and it will allow you to get an advance of that money back so that you don't even have to pay it at all. So that's how you do it. You file a 941, an amended 941 for 2020, and you file your right 941s for 2021, and you can even file a Form 7200. So check all those out. As always, if you want my help, that's what I am. I'm a professional. So just email me at Christie@victoryadvisory.com or DM me or book a consultation at victoryadvisory.com. I would be happy to help you regardless of who you use. This is not the time to DIY this particular thing. Work with your accountant and your tax professional and a payroll provider. So I just want to thank you guys so much for joining me. I always enjoy this. Please let me know what questions you have. Tag me in the comments so that I'm sure to see them. Please subscribe if you're watching on YouTube. I just found out that we get more benefits if we get subscribers, so I haven't even said that. So please subscribe and please let other people know about this benefit because you guys can see it is super helpful for you and can be super helpful for other people. And what I want is for all of us to have the information that we need to make strategic decisions to most benefit our businesses so that we can achieve sustainable, profitable businesses, but also have victory in our lives by having more fulfilling lives and allowing our employees and those we work with to have that kind of life also. So thank you guys so much again for joining me. It's been good to learn this because I wanted to learn it because I wanted to help you. So thanks so much, and I'll see you next time. Thank you.